Hi there, welcome to my second video or midweek video, educational kind of video. My last one was on setting up charts. If you like that, by all means check it out, give it a thumbs up, and it probably makes more sense watching that first before this one. This one is on the relative strength index. I've asked people what you'd like to see, and someone, in fact a couple of people said relative strength, so I'll cover that. Before I do, if you like this video, by all means subscribe, hit the of course notification bell as well, and that way whenever I release a video you will get it straight to your inbox. Okay, and if you like this video, give it a thumbs up, and anything you'd like to see me do, by all means comment below and let me know. If I can cover it, I will. If I need to educate myself on it, I'll try my best. All right, so comment below, and by all means subscribe, hit the notification bell. Okay, so relative strength. Before I go any further, as an investor, you should never, or I'm not going to tell you what you should do, but I never ever invest in a company without looking at the fundamentals first. I never base any investment strictly on a chart, okay? That way I'm deemed to fail. And I think difference in investing and gambling is with investing, you can try and push the odds in your favor, but that takes research. And I mean fundamental, looking at balance sheets and cash and all that stuff, plus technical, the chart. And coming to the relative strength index, I think is a very important indicator on the chart. Why? It's about momentum. And I've always said, with small cap stocks, pre-revenue stocks, or stocks just starting out on the AIM market, there's nothing bigger than momentum. There's no bigger factor, when it comes to momentum. And I've often said several times, all you need to get a winning stock, a small cap stock or micro cap stock, is hope plus hype plus potential, and that equals momentum. That's why I like the relative strength index, because it's about timing that momentum. All right. So what is it? It's an index, like I said, over a specific time period. All right. Default is 14 days. You can change that. I don't change it, but it represents the size of recent gains and losses and measures the speed of these price movements. All right. So let's look at it. It's a line displayed as an oscillator. Okay, so and if you look at my last video on how to set up a chart, you would see that I added this, and it goes to the bottom of the chart. And like you see, it goes from 0 to 100. Okay, there's a band in the middle, 30 to 70. You can change this. You can change this completely if you want to, but that's oversold and overbought. Here's the band area, which is well known as overbought, oversold, and I'll go into that in a bit. But that line is the RSI, okay, and that's the scale. Okay. Let's look at it. So the RSI has higher value when the average gains are larger than the average losses. Okay. Now let's look at the first red circle here, red oval circle. Circle's oval, isn't it? Circle, oval, circle. Anyway, you can see there the price action. That's the red candles. They've had days where the share price is closed lower than it's opened on 4 occasions. Big gap there. And that's why the RSI has gone down from around about 50 odd down to the oversold below 30 level. Okay, and then it sort of bottoms out because you get a couple of a big buy day at the bottom here, and then before it comes to the green, the first green oval, you'll see it starts to rise because we're starting to get more up days, more buying days, more up days in the share price than down days. So the relative strength then punches back way above to 60 level. Okay, then all of a sudden you get a sell day, a buy day, and then a couple of sells. So it goes down. This is about strength and weakness of the share price. That's all it's about. Think of that in your head. It's measuring the strength or weakness of a share price. Okay, that's what it means. Based on the gains or losses. And then let's go to the second green oval. And you see there the majority of those days, the share price is being bought, it's going up, it's rising. So that means the strength rises. And all of a sudden, 3 down days and the strength comes down. So the RSI has a lower value when the average losses are larger than average gains during that period. Okay, and that's rolled over a 14-day rolling period. Okay. Now, I mentioned earlier that band there, you see that sort of purple pinky band, that's marking out the 70 and the 30, okay? Now, above 70 is regarded as overbought. Strong, the share price has become strong momentum there, and it's got a stage which has worn itself out. It's been exhausted after a while. And so when it gets to that 70 or above, it can carry on doing that for a while, but there's a chance it may have a pullback. It may. I got to state this. It may have a pullback. Now, when the RSI goes below 30, it's regarded as oversold. Sellers have sold it, and they think so it may result in a bounce because there's no more sellers around, and so it's been oversold. And anything in life, I always like to refer to as the pendulum event, or the pendulum effect, especially in shares, stock markets. Things overshoot. When things are getting sold, they normally get oversold. When things are getting bought massively with momentum, they normally get overbought. All right. So never buy a stock on the RSI alone just because it's oversold. And this is the same is true with overbought as well, but that's shorting pretty much. I never do shorting. I'm an investor. But let's look at the Vodafone chart. As you can see, from 2018, pretty much, to now, or recently, it's had 1, 2, 3, 4, 5, 6, 7, at least 7 oversold days. In fact, more than that, because those are double dips, some of those. But if you'd have bought every time that stock went oversold, you'd have been in big trouble if you held. If you're a trader, maybe you can go out. But, it's not an indicator to say, right, it's oversold, buy. Because like I said earlier, remember, it means strength. It's about strength. It's relative strength, okay? Or weakness. They call it strength, but strength or weakness, of course. And what that's showing to you is that share price there is weak. Now, will it come back or revert to mean and get its strength back? If it's in a downtrend, no. If the fundamentals are wrong and stacking up incorrectly, and the fundamentals are getting weaker, that share price will continue to drift downwards, and it will show further weakness, and so it'll become oversold again. So just buying on that weakness is not good. A better ploy is to look for a company that's in an uptrend and look for the pullback in the RSI. I'll show you that later. A temporary sort of reprieve of strength, and then buy back in because it's already got momentum. Momentum is just settling back and relaxing a bit. Okay. Relative strength diversion. This is very important here, and it's good for looking at tops or bottoms. Divergence occurs when the RSI and the price are going in opposite ways. The situation signals that the momentum behind the price movement is slowing down, and a possible change in price direction may be ahead. So that's very important to look at because, like I said, you want to know if a trend has stopped and it's about to change, like a downtrend is about to chop and stop, or the other way around if you're shorting. Bearish diversion appears when the price is rising but the RSI is falling, and the opposite is true of bullish, when it appears when the price is falling but the RSI is rising. Let's look at that on a chart, okay? This is Brave Bison. If you look, I've drawn an arrow at the top there. The share price went from just under 3.2 to 3.5, so it formed a new high, okay, the share price, but the RSI didn't. The RSI went down. So the RSI didn't form a new high, but the share price did. And like you see, what happened then? Big sell-off afterwards. That's showing that it's exhausted a little bit, the price is wearing out, and then you had from fundamental reasons why that sold off. But that's just an example, and the opposite is true as well. You can see a share price sometimes grinding a bit lower, but the RSI is building. That means strength is building, momentum is building, and if that continues, then the share price will turn around and will pop up. It'll go higher, Okay, so 3 numbers worth looking at and remembering. The 30, which is regarded as oversold level. The 70, which is regarded as overbought. There's also the 50. Very important. And you often find a company, when it comes from overbought or oversold, it doesn't really start to move until it crosses that 50 level. And I'll show you that on a chart in a bit. All right. So this is how I use the relative strength. And this is what I'm going to show you in the chart here. I use it to fine-tune entry, to avoid adding at the top if I think a company is strong, but I think it's slowing down that momentum. I avoid adding at the top, or to consider selling. So I also use it obviously for topping up as well, adding to or just buying. And all companies have a unique chart pattern and momentum. Therefore, each company's RSI should be looked at individually. All right, let's look at some chart examples right now. Okay, this is the chart of Bidstack, a company with phenomenal momentum. Let's have a look at this. So at the bottom, the RSI. Okay, I've drawn a line at 50. This is why I said about 50 being a very telling sort of number on the RSI. And a company doesn't really move until it gets through this. So you can look at it oversold, overbought, yes, but when it gets through this, it starts to move, and this is why I'll show you. So let's start off by going around here from the start. And like I said, I recently said on a previous video, not the educational video, my last video before this, about the RSI and bid stack has very rarely got below 50. When it does, it presents a buying opportunity if you've done research. And look at this. So it started off the IPO here, pretty much RSI kicked in below 50, picked up a little bit. So as soon as it came past 50, look, it started moving up here. Okay, then it came back down, dipped down again. Massive, overly sold here, below 30. This is the oversold level. But if you'd bought here, you'd have stayed, out of the money for a while. And like I said, it didn't start moving till it really got above 50. Then it started picking up, okay? And then sometimes, listen, this is what I say with momentum stock. When it gets to overbought, over 70, don't sell. It needs to get overbought like this to get some frenetic energy going. And it almost gets on people's registars and radars, So it gets over 70 and it has a little pullback. This is then, when it first goes above this level, you should start looking, on TradingView that I use, you can always put alerts on these relative strengths. So it comes back to below 50. Now, again, if you bought below 50 here, look at this, and then all of a sudden punched above that 50-day level, or 50 sort of area, 50 number, and it went above that big up day here. Look from 8 to 10 pence there, and again it comes back again. And these are oftentimes the buy. I mean, bid stack hardly ever comes back to this level, but you can see, even if you'd wait to come back on 60, you've done quite well in this uptrend. Leave, wait to come to 60. I put an alert in there. I started buying here at 60, so when it got down days. And I said in the video, I said, listen, this very rarely goes below 50. So went below 50. Again, you bought here, anyway here, and it popped back up. It's very good. So like I said, some stocks, if they've got strong momentum, they very rarely get oversold. Okay, they very rarely go down to 30. So there's no point to bring an alert on there. If you want to add or top up, you have to look at how strong a company is. It's relative strength. Certain companies have more momentum than others. So you have to look at the levels, maybe draw a line. I often draw a line on the 50 level. Let's look at another company which is actually doing quite well today. Big Dish, I hold some stock in this. And if you scroll out here, again, it doesn't really move until it gets above 50. So it looks at a big downtrend, okay? Came down here December and then January. Then all of a sudden, look at this. Look at this 50 level. If you put an alert on here, punch above that. If you'd bought in there, okay, you've done really well. You've gone from 2.5 to 3.5, or sorry, 1.5 to almost 3.5. Oh, alert there. There's an alert popping up there, actually, on remote monitor systems. So it punches up above that. Look, 350, and then it's become over again. A double top. Look, it comes up overbought. Don't sell it there. Let me just move my big fat ball head out of the way. So if you'd sold here because it's overbought to 77, you'd have missed the move from 2.6 all the way up to 3.5 or something like that. But this is very telling. There's divergence again. Look at this. So it failed to make another high anywhere near this. Even though the share price tried to go up there, it opened there one day. What price was that? Move this across here. So it opened here at 3.6. The last close it was at 3 point something there. But the RSI started fading away here, look. All the way back down. And then all of a sudden it's cooling off. So a little bit of divergence here. The RSI didn't keep up with the share price. So what we're seeing here is weakness, even though the share price is staying up there and it's sort of open there. We're seeing massive weakness down here. That's very telling, And all of a sudden we've come back down to 2 pence. But look what's happened again in the last couple of days. Above the 50 again. Boom. Up again. So you can see the strength, the take up in the strength here. It's very impressive. So that's Big Dish, and that's bids, like I said. Let's look at the Brave Bison for a second. It's a telling stock. Like I've looked at this earlier, but let's have a look at this. And so my phone was going off there. I do apologise. Okay, let's look, again. Let's draw a 50 line here. Let's draw a 50 line. So we go here. Sometimes you adjust it to see where. Again, around about 50. Look at that. On 50, boom, it takes off. Look at this one. So here, it starts to pick up here, okay? Then here, then it really goes. In fact, I'd say you could lift this up to about 55. When I punched through 55, woof, no one saw that one coming. But again, it happens here. It starts to come the day before, look. Day before that big gap up, it gets above 50. And again here, it goes below. When it starts to hit the uptrend, it's above the 200-day moving average. You could say anytime, it comes back below 50 is worth a look at or to buy. But then the momentum starts to pick up at 50 and it starts to really rock and roll. And look at this. Look at the time it spends above that 50 line here. Okay? It's not this for a long time. That is a significant uptrend. That means a lot of strength. So you could have bought here at the dip and it's still gone a bit further. But again, like I pointed out earlier, we see divergence here. We see the share price is going up. Let me just scroll back there. Share price is going up. But the RSI is coming down. Look, topped out there. And yet the share price went higher here. But the RSI didn't make a new high. Share price did. It came back down and then we fell off a cliff. All right. So I'd say use the RSI in conjunction with other indicators, but it's an excellent, gauge of momentum in small cap stocks. Momentum is pretty much 9/10 the law, So it's very good to look at. So I would never, even though I would never buy on a company that's gone above, overbought, over 70, I would never naturally sell either. You have to look closely, because when it starts, when a company first hits over 70. Let's go back to the bid stack for one more thing. When it first hits over 70, it's when it's starting to get warmed up, So never automatically sell when it gets over 70. Like here, look at that. If someone sold here, it's overbought. It's gone up to 82, it's overbought. Yeah, do you know what? You just sold at 8 pence and missed out on this massive run up here. So a company needs, all it's saying, remember now, it's strength. Okay, so when you see people say these, overbought, oversold, they've labelled these areas just as that. But it's a measurement of strength. So don't forget, when a company gets above 70, it's strong. The share price is strong. It may have a pullback, but it's showing strength. When it's below 30, it's showing weakness. Keep that in mind. And like I say, so when you see a company pop up at 70, that's good. It's not bad. It's good for momentum. It's strong momentum. Now, I wouldn't buy over that level because it may have a pullback. But I wouldn't sell in that level either if I was holding, Does that make any sense? I hope it does. So I hope that made some sense to you. If it didn't, then by all means, put a comment below and I'll try and answer for you. But the important thing, like I just said there, is to remember that the RSI is a strength indicator, momentum indicator, okay? So keep that in mind. And a couple of rules, like I said, is don't buy just because it's oversold below 30, because that means it's just weak, all right? It has to come back up. And don't sell just because it goes over 70. That means it's strong, but it may need to pull back. So, but don't buy there either, all right? But it's a very good way of, and I say every share price, every company has a different sort of footprint, So put a couple of lines in there. Look where support is in the RSI, not just on the share price, on the RSI. See where it bounces to, the strength, and where it picks back up. And I think that will give you a good guide. Like I said, if you have any questions, put in the comments below. Also, if you'd like me to look at anything else on the chart, by all means, comment below. And please like it and share it. The more people that view this, the more people will obviously get value from it. And I'll do more. The more views, obviously, if it's helping people, I'll do more of them. But suggest anything you'd like me to cover. And the most important thing of all, don't forget, hit that subscribe button, okay, and the bell. Because what happens is, if you hit subscribe, then you'll only see my videos if you come onto YouTube. If you hit the bell, you will see them, or you get a notification to your email letting you know when I've just uploaded a video. All right. Hope that helps. Like I say, I'll try and do one of these every week, weekdays. And then on the weekends, I've still got one come out. Weekends, I do updates on companies I hold. They release news throughout the week and my thoughts on that. This week, of course, I'll be looking at Xeros and maybe Bidstack. They've had some news out. They're not RNS yet. As I record this, they may do in the week. Who knows? But there's a couple of other companies I want to cover as well. So by all means, subscribe and hit that bell. Thank you very much.